Alright, um, good day and welcome to FIT, known as Financial Elevation Academy for Traders. And our motto is Daring to Raise Consistent, Profitable Traders. And it is with great joy we present to everyone and anyone our masterclass 2.0 for 2025. We did 1.0 last year, and we are kickstarting the year 2025 with very exclusive and detailed teaching on how our traders approach the market. And I will be your coach for the next couple of sessions we'll be recording on this masterclass. So as you can see on our far left table of contents, we'll be teaching you what is market structure, what is a break of structure, what is liquidity, what is an order block, what is point of interest, what is multi-time frame, what is kill zone, and then what is time and price synchronization, and what is the entry models, and how to approach the market entering it. And we'll be doing what is top-down analysis and how to do it. Now, with all of this being stated here, I trust that by the time you are done with all the videos we'll be doing to explain everything, you will be on the path to being a consistent, profitable forex trader. Now, the extras I'll be adding to this masterclass session is teaching you guys how we use the Fibonacci retracement tool, and how to take entries with liquidity, and risk management, and how to synchronize everything from what is market structure all the way to risk management, and just a little bit of why we don't trade Asian session, and AMDX, which is refined quarterly theory by me. And I believe at the end of the training videos that we'll be making, because for each of the topic we'll be doing them bit by bit, and so you can have it on your end and watch it bit by bit and know how to take them step at a time. So we are believing that by the end of this masterclass training, you would master market structure, and when you practice it enough, you will be profitable in the forex market. Alright, so that being said, we're going to treat the first topic. What is market structure? Alright, so what is market structure? Market structure, it's just the basic movement of the market, and here we have the market goes up, or the market moves in two directions. It's either it's buying or it's selling. So this is a bullish market structure right now. It's buying, right? Okay, now if I am to explain it in layman term to anyone, this is what I would say. Now, a bullish market structure, it's a situation or a market pattern where new highs are being formed and the previous lows are being respected. Yeah, that's the best way to explain it. So this was a low that created this high, and this high created a higher low, which is this one here, and this higher low created a new high, or you can call it a higher high, right? So A bullish market structure, or like I said, we have two types of market structure, a bullish structure and a bearish structure. It's basic stuff that we all know, but in this basic stuff, there's a lot of information that you will need to know. Okay, now the new high or the higher high, why is it called the new high and the higher high here? Is because it took out the previous high and created a new high. Now it's created what? A higher low. Why is it called a higher low? Because this low is higher than the previous low, right? So this is it. Now on the continuation that this continues to happen, it simply means the market is on a bullish structure. Now if we were to have a bearish structure, I would have inverted my chart, but it means everything here would be inverted, so I wouldn't want that. So a bearish market structure is something like this. Alright, so what's happening here? Let me push this aside. Okay. Alright. So I need to always pay attention to my mouse and yeah, or rather my cursor. So a bearish structure is a situation or a market direction whereby new lows are created and the previous highs are being respected. What do I mean? This was a high that created a low, and the low, a new low rather, created a lower high. Now this is the high, and remember on the bullish market, the lows were creating new highs or higher highs. Now on this scenario, the highs are creating new lows, or we could call them lower lows. Now this is a high creating what? A lower low, a high creating a lower low. Now you would wonder, why is it? Because when the market is bearish, the lower highs, because since it's bearish, the highs will not be like the bullish market that is creating higher highs, right? The highs would not take out the previous high, rather it will do a little bit of retracement into it and then further push down to create a new low. So on a bearish market, new lows will make will create highs that are lower than the previous highs. Do you understand? Now this is a new low creating a high that is lower than the previous high. So this is a bearish market structure. So it just continues like that. The lower high creating a lower low or a new low, a lower high creating what? A new low or a lower low, a lower high creating a new low or a lower low. So this is a bearish market structure. Okay, now this explains market structure in summary, but now I want us to push deeper into all of that. Moving on, our next heading here says, what is a break of structure? Now as you can see, this is a bullish structure, this is a bearish structure. We talk about the break of structure because it helps us to identify when the market makers have intention to change the direction of the market. Let's say we are bullish and now we want to become bearish. So the break of structure help us to see that okay, the market has changed from one structure to another structure. Hence, I would show you in details how to identify a break of structure. Now, this is a bullish structure going on currently. Now, a break of structure will simply mean that this high, now that is here, normally we should have it retrace into this level and create what? A higher high. Let's say something like this should happen for a continuation of a bullish structure. But on this note, this won't happen now. A break of structure simply means that a previous high or a higher high fails to respect the higher low and now creates what? A lower low or a new low, so to speak. Sorry for the mistake there. A new low. Now, a new low is a low that is obviously lower than the previous low. Now, this right here is the break of structure. Let me just draw it better. This. Now, if you notice here, this was the previous low. That normally when you look at the bullish structure, all the lows were higher than the previous low, higher than the previous low, higher than the previous low, higher than the previous low. But on this occasion, we will now see a huge sell move come into the market that will not respect this low and it will create its own new low, meaning that this high failed to respect this low and created a new low. As such, this has done a break of structure. Similarly, when we want to talk about this other one here, now this is a sell break of structure. Now, because a sell break of structure will happen on a bullish market to tell us that okay, the market has intention to sell. This does not mean that you should start selling. No, it's only an indication that the market has changed structure. Okay, now for a bearish market structure, this you can notice here the previous high or the lower high created a lower low. So by default standard, we are supposed to respect it and go on creating a new low. But a bullish break of structure will mean that it will not respect this level. It will just go all up, right? And now this right here is a bullish break of structure because it has disrespected the previous high and created a new high here. Normally, it was not supposed to disrespect it. It was supposed to come somewhere in here, retest it, and then create a new low, right? But now, it disrespected it and created a new high. Why is it a new high? Because it's supposed to have not disrespected the previous high and not create a new high. But this right here is an indication that we have changed structure or the market has intention to start buying. So this is a bullish break of structure and this is a bearish break of structure. Now, for further clarity, I would take these drawings out and just highlight what a break of structure is. Okay? Alright. So, now like I said, a bearish break of structure, a high that did not respect the previous low, now it creates a new low, right? So this is a bearish break of structure. Now, a bullish break of structure on the other hand is this. Now this is like a existing sell structure playing out, a high creating a lower low, and normally we should respect it and then continue down, but no, it disrespects it and does this. So this right here is a bullish break of structure move and this is a bearish break of structure move. Okay, so what makes it a break of structure is the fact that, like I showed you in the other drawing some market patterns, it did not respect it. If it was not going to break structure, this would have happened, right? And then from here we'll buy back up. If it was not going to break structure, this would have happened, and from here we'll sell down, right? But No. You can see it now. So this is what makes it a breakout structure, because this high took out this low and created a new low. This low took out this high and created a new high. Okay, so that is the first level of a breakout structure, which we all know. Now I would have to show you more details. Give me a second, please. Okay, now we can also consider this as a breakout structure. This is a breakout structure, okay, and this also is a breakout structure. If you remember, what I just did earlier was to add something like this. Yes, so this time I am deleting this. Okay, let me show you here also. So this time I am deleting this part and this part and just focusing on the breakout structure. Okay, so this is a breakout structure, this is a breakout structure, this is a bearish breakout structure, this is a bullish breakout structure. In case you need me to highlight it, bearish BOS, bullish BOS. Alright, so this is a bullish BOS here, and this is a bearish BOS here. Okay, now this is a previous high that was taken out and a new high was created. This is a previous low that was taken out and a new low was created. Okay, so that explains the breakout structure, and moving on, we will be talking about liquidity. Yes, okay, I think for me to give you guys clearer view, we would first consider what an order block is, or the way I see order blocks, and from order blocks we will now talk about liquidity. Okay, so this is a breakout structure here, a bearish one, and this is a bullish one, and as such, when we want to take notes, because sometimes you would probably not see the structure play out like with the previous, like I drew the earlier time, a shoulder here and a shoulder here, but this also is a breakout structure because we want to be able to note this precisely. Okay, so moving on, let's talk about quickly what an order block is. Now, the order block, with the way I see it now and the way I've understood the chart over the years, I can tell you that the order block is the last heavy buys you saw, or the set of buys you saw, or the set of sells you saw before the market had a heavy rejection that led to the breakout structure. Now, the reason why it's called an order block is, I would say, with my own understanding, if you notice, there were sets of buys going on here, and when price got to this level, nobody in the whole wide world was willing to push price beyond this point. That was why you saw a rejection. Similarly, nobody was willing to push price lower, hence you saw an heavy rejection. Now, this was the last time people were heavy on buy or were buying, and this was the last time people were selling. So psychologically and market structure wise, there is a lot of sentiment at these levels. There is a lot of sentiment at these levels here. Now, what that means is that the last set of sells before the bullish breakout structure occurred, or the last set of buys before the bearish structure occurred, there is heavy rejection of price around this zone, meaning that if the market should probably buyers want to push the price up into that level, you would see a high level of rejection going on. So an order block is the zone at which the last set of buys happened or the last set of sales happened. So that is that on what is an order block. And on the next session, would make you understand the importance and relevance of the order block. All right.